we'll be doing today is just having a look at what the futures market is showing us today, having a look at foreign exchange and then crypto, and then I'll let you get back to your days. It's a pretty quick update. I hope to not go more than about 15 minutes is my goal, to keep them 15 to maybe 18 if I get on some sort of a tangent somewhere, which can be easy for me to do sometimes. So let's pop over here and have a look at what's happening in the marketplace. We'll start, we'll just work at my screen's laid out over here. We'll start on the right side and back over to the left, just having a look at these various markets. So we'll start with futures and see what's going on there. Last week, really last few weeks, we've talked about the fact that we're in an upward trend. So I'm looking at a 4-hour chart here, starting with the E-minis. We're in an upward trend. The conservative play is to trade with the trend, right? You hear that all the time. The trend is your friend. Trade with the trend. I kind of think of it like Newton's first law. An object in motion tends to stay in motion. That's how I look at the trend of the market. It can change, right? It can obviously stop and something can impact that flow and the market can change direction. But until it does, the safest bet is to trade with the trend, right? So anyway, long and short of it, we're in an upward trend. We hit some new highs again last week. On Friday, we pushed or was it Friday? Yeah, Friday. We pushed to 33.30 and even a little bit through there. Now it's over the course of Monday, which was a U.S. holiday. It kind of stayed steady. Off hours trading this morning pulled back to the 33.10, 33.12 area. And that's where we'll probably open this U.S. session here in about an hour, is at that 33.12 to 33.15 area. So we'll see where that goes. I mean, it could pull back off of that. But anyway, after all of that is said, what I'm looking at here is to see if we, pull back a little bit further. Obviously, if you break above this 33.15, 33.16, I'll wait to see if it closes above and then look to buy off of that. If we pull back to 3,300, big psychological hold number here would be another spot, potentially to look to buy off of. So just some trading ideas there. Obviously not telling you what to trade. I'm not a CTA. I'm not a investment advisor. What you trade is what you trade. Even if I was any of those things, still it's up to you to push the button. It's not up to what anybody anywhere in the world tells you to do. You make your own decisions. So just to throw that quick disclaimer out there to make sure that everyone's clear on that. Just giving you some ideas. Over here on crude, we talked on Friday about 59 being a good area to sell off of. Again, we're at a downward trend in crude. Crude is trending down. It's hit kind of this channel. Really the last, week or so, maybe a little bit longer, we've been in this channel kind of between 58 and 60. That's a lot of money in crude. So, unless you've got a large account, you're not really going to set a buy up here and a stop loss way down here. So the tradable opportunities trading with that trend would be to sell pullbacks. Now, obviously, we pulled back to 59. We've selling off of that. You'd be back down to this 58 area, which has kind of been that low. So at this point, we've been in this channel. It depends on how you want to play it. Obviously, you could look to say, okay, if we close below this, do I want to sell off of 58? Or do I want to wait for it to pull back to 59? It just depends on how you want to play this game here. We do seem to be in this channel. A lot of, this seems to indicate that we might have hit a bottom over here on gold, on crude. I mean, it's been as low as 55 over the summer, so it could certainly, there's still certainly a lot of room for it to continue lower, but it does seem to have hit this channel for right now. I don't like selling off the bottom of a channel, so to me, waiting for it to pull back to the 58.50, 59 is the safer trade, or looking at counter trend trades, and this obviously is a whole different mindset, but looking at counter trend trades and saying, if we do push down to this low over here of 58.40, call it 58.50 is probably a better whole number. If we do push down to that low of 58.50, is that a potential spot to buy off of and be counter trend? Of course, anytime we're in any kind of a trade, we want to make sure we have a stop loss, and we want to make sure that that stop loss meets our risk parameters. So keep that in mind as well. You've always got to manage risk. Managing risk is paramount. As I've talked about before, I feel like if you manage risk well, you're already ahead of most traders out there, because most traders say they're risk averse but end up getting in positions where they keep negative trades open for longer than they should, and they close winning trades sooner than they should. So if you've got a good risk management process, you're already head and shoulders above most retail traders out there. Retail traders is like, that's you and me, people that don't have professional designations and trade for firms or funds or manage money or things of that nature. Just retail traders is the regular guy, you and me. All right. So anyway, gold. Gold is still in an upward trend, although today we have pulled back a bit. It has come back to this 1550 area, which has been a level that we've been playing off for really since we were fully underway with our first full days of market activity after the new year. It's been hanging right around 1550. Tradable opportunities for me, just a trade idea, it would be to continue to buy off of 1550 is what I'm looking at there. All right, with that said, let's pop over here and have a look at the Forex market. Forex, I'm more of a intraday setup kind of person. We're looking at currency strength to identify which currencies we'd want to pair together. Remember, in Forex, we've got 8 major currencies. So there's 8 of the 180 currencies around the world. There's 8 of those that have the most volume, that have the most activity around them, and that are traded with each other. Those 8 are the USD, the Euro, the Pound, the Yen, the Aussie, the Swiss, the New Zealand. What did I miss? The CAD. And the CAD. What we're looking at here, obviously, because those 28 make up, or those 8 make up 28 potential pairings. Again, some are fairly active, some aren't fairly active, but those 8 can be combined into 28 pairings. They're all interrelated. All the currencies are interrelated. So in order to really see what's going on in the currency market, we need to be able to split that down. We need to be able to chunk it down and look at what's actually driving the market. Which of those currencies actually is showing that strength, which one's being bought, and which one is being most heavily sold. That's going to give us the most potential for activity, and it's going to give us the best opportunity to get into a trade that's actually moving. Remember, just because you're watching, let's say, the Euro USD, doesn't mean it's going to have, I can't talk this morning, doesn't mean it's going to actually move. We need movement in order to be able to potentially make money, right? So what we're looking at are the strong currencies, or looking for, would be a strong currency that's pushing to strength, and we'd compare that to a weak currency that's pushing to weakness, and that divergence here is going to give us the tradable opportunity. So I have an indicator here that I'm watching that allows me to figure out which currencies are moving against one another, and gives me the best potential for profit here. So this is on an M5. I really chunk it down to an M1 when I'm making my decisions, but just to give a good visual of what I'm looking at here, you've got the pound this morning that's been pushing to strength. We've got the USD and the the USD and the yen that are both pushing to weakness here. And if we go over to a chart and have a look at that, we can see that both the pound yen and the pound USD have shown some decent movement as that pound has diverged from the yen or from the USD, which gives us that opportunity to make money in the marketplace. Now at this point, if I chunk down to an M1 here, at this point, am I still interested in buying, oops, what happened there? Oh, seconds. I don't want seconds. Sorry, I chose the wrong time designation as a 1 second candle, which that just seems amazingly fast, and I don't know who would want to see data like that. I guess folks that are trading spread information might want to look at that. Oh, and I didn't show you this screen over here. This is what I was looking at. I was talking about the potential for movement. We saw the pound versus the yen, or pound versus the USD. I failed to switch over to this screen to show you. We saw that divergence on the other screen with the pound strengthening, the yen and the USD both weakening. That's what it looks like on a chart as we see those two currencies actually moving. So good kind of look at what we're seeing there. Now I chunked this down to a 1 minute. I'm actually watching a little bit faster just to see what's actually going on and making my trading decisions, so I can be early into that potential movement, into that divergence. Right now, at this moment in time, we're looking at a couple of things here. We're seeing the pound continuing to be that strong currency, but also the New Zealand has been pushing strength. And we've got 3 currencies down here that could be potential pairings. One of those being the pound versus the CAD, which typically is a pretty interesting pairing to me. It's got a wide range, although today it's already moved quite a bit. Does that mean it can't move more? Well, of course not. It can. No one knows how high, how much it's going to go, but it does. When I see something like this that's moved already, into pretty much what its typical range is, it just tells me to maybe pump the brakes and wait for a better opportunity. So what am I looking at here? I see. Let's just quickly do a very short lesson, then I'll wrap it up. What we're looking at is we look over here for divergence, and we're finding that strong currency, comparing it to a weak currency. When I find out what that currency pairing or a couple of currency pairings might be, I go over to a chart that looks something like this, and I'll have another look, and I'll say, okay, great, I see the pound is diverging from the CAD, but how much has it moved today? I mean, I'm into the U.S. session. The foreign exchange market gets rolling. Really, in my afternoon, yesterday is when the market started out with the Asian session. Most of your heavier volume begins in the London session. So really, since London, we've been seeing this pretty significant push here to strength on that CAD, on that pound versus the CAD. So right now, coming into the U.S. session, even though I'm seeing divergence, I'm also seeing a currency pairing that's moved 125 pips on an average of about 100 and anywhere from 100 to 140. So that's telling me, hey, we may have reached the top of what that range is. Again, does it mean that it can't move more? Well, no, of course not. It could certainly move more, but how likely is that? I'd rather have something that, if it's got a 100 pip range, has maybe moved 70 pips coming into the US. That's telling me that there's still some level of opportunity there. Again, does that mean that it's because the average is 100 and it's already moved 70 that it will move 100? No, absolutely not. But it has that better potential, right? So I weigh that out when I see those currencies. Then I also look at what's happening with the volume. I have an indicator here that shows me what's happening with the volume, if it's moving to the buy side or sell side. We're also able to see how that tick detail is coming out, and whether we're seeing changes that entice buying or changes that entice selling. So we may see, heavy volume with currency moving up, but actually is we're seeing, even though it's heavier volume, we're still seeing kind of a selling, what's the word I'm looking for, influence to it, which indicates that we might be selling into a top at that point. When I see things roll over against this, so this indicator looks at a moving average as well, and when I see it start to roll over, that's when I might look to take a reversing type of a signal here. We can talk about all that at another time. What this indicator here is showing me, how it works, and how I use it with my actual currency trade. In fact, I'm recording a lesson today. I've got 3 lessons up now for in the members area on foreign exchange trading, and I'll be adding a 4th lesson and a 5th lesson this week, which will get into more of how I'm utilizing the volume detail and also provide you with a very simple strategy that you can apply that has that mathematical edge that gives you positive expectancy when applied properly in the marketplace. So we'll get to that this week as well. What do we need to talk about now? Really quickly, because I'm already 15 minutes, let's hit crypto, and then I'll wrap it up and let you guys go. So over here in the crypto market, what we're looking at is the two majors, Ethereum and Bitcoin, kind of move in step with one another, but both tradable in their own fashion. Ethereum, we'd been seeing this level, the 67 area, tested quite a bit last week. It tested, it really couldn't close above it. Finally pushed above, and we were looking at this 70, anywhere from 75 to 78 area. It repelled off of that, and now we're kind of back here at this 67 level. We are still in an upward trend, so looking to buy pullbacks on both of these would be the preferred method until that trend changes. And when that trend changes, obviously then we're going to look at different directions. But right now, pulling back to 67 over here on Bitcoin, pulling back to 80, 86 really, looking pullbacks to 86 would be the viable opportunities on both of those. And finally, what else? Did I hit Crystal? Now let's see if I can pull up Crystal Token here. I've been talking the last few days about this beta test that I'm in, which is a friend of mine has a pretty cool trading bot that he's going to be rolling out in the future. It's not publicly available yet, but it's interesting, and I think it's good to kind of show you what's going on. It's a combination of manual trading and bot trading, and right now I started this. I've shown you the account balance before. I started it a little over $2,000, right around $2,000 in mid-December. I started taking screenshots daily January 2nd. So from January 2nd, where my first screenshot is, I started with 2112 was the account balance January 2nd. Take screenshots every day. It's pushed to a high of a little over 2,400 coming into, I think, let's see what day that was. I think it was Friday. Yeah, 117. So 117, it had pushed to a new high of a little over 2,400. As of today, we've pulled back to 2,380. So, for the month so far, 21 days in, for the month so far, I'm up a little over 12%. I shouldn't say I'm up, because I'm not. I mean, I am, but the program itself is up a little over 12% on my account balance. Ignore the reports and earnings and stuff down here. He's still working on that with his programmers to pull accurate data. It hasn't been updated in a while, and it's not accurate, which is why I take the screenshots every day. Obviously, all these things will be fixed before he rolls this out, but really cool application. I'm digging it. It's a cool passive way to have some pretty cool, I don't want to call it AI, but it's ultimately is what it is. Some bots that have limited risk and good reward ratios trading for me in the background, allowing me to have kind of a passive growth to my account where it doesn't require me to take any daily or immediate action like I do with these other platforms. So anyway, that is it for now. I'll keep you guys posted on the crypto stuff as that gets ready to roll out. Gets closer, probably still a couple of months before he's ready to actually make that live for the general public. When it does go live, more than likely it's not going to be available to people here in the US. It's going to be outside of the US just because of regulation. As with a lot of things here in the United States, very heavily regulated. That's why, by the way, a lot of people don't show you live trades, because there's regulation. If you're showing live trades, you have to be a CTA, and that's why people often talk in hypotheticals, because they don't want that oversight and that regulation in their backyard. If they become a CTA, they've got audits and government fees and yada, yada, yada that they have to keep up with, and it just makes it a lot easier to talk in hypotheticals and give ideas without getting into the regulated realm, which is a whole other thing, and that's a sidebar that I don't even need to go down on this. So anyway, long and short of it, I'm again longer than I wanted to be on this, but hopefully you got some good information out of it. Coming back over here, we're looking at a few different things. Futures market, we've got some levels that we're looking to trade from. We talked about on the E-minis. We talked about levels that we're looking at over here on crude, and levels that we're comfortable in trading from in gold. So, you know, I like the 1550 area personally is my tradable idea to go long off of 1550. Over here on the E-minis, you know, looking at this, if it pulled back to 3,300, it'd be great, but obviously I'm going to watch this on a shorter time frame as we get going and see where we're really seeing that support or resistance on an M30, and look to continue to buy. I'd like to buy these pullbacks more than I want to get into counter trend trades on any of these. So that's it for now. Have a great day, and I'll talk to you later. I'm speaking Thursday afternoon. Join me there. That's it.